Okay guys, so we are back with another backtesting session. In this session, we are trading the month of June. Previously, I have done March, April, and May. I don't know why I didn't start in January, but I started in March for some reason, some apparent reason, but we can probably go back and test that month, the 2 months at the start of the year anyway. But we are in June now, and we are going to trade the month of June in this video. Previous months have been very successful. Last month, if you haven't seen the video, I'll give a quick recap. We had 28 days of the month in drawdown, but the last few days we ended up hitting a winning streak and ending the month 3% in profit. So I'm going to actually continue trading on that account, the one that I was obviously trading in the previous episode. Usually I've done it on a separate account every single time so that you could watch the video and the account would start at 100k and you'd see after the month what it would be at. But because this is going to be, a guaranteed series on this channel, I'm going to basically keep it going now. One account, keep it going and see the results long term. So you guys know the rules, so I'm just going to jump straight into it. If you don't know the rules, go and look at the previous episode on the channel. So we obviously are at 130 and we'll see what happens here. See if we can get a break of structure. Okay, so this is a break of structure. And like I've said in previous videos, it doesn't matter how clean it looks. If price breaks structure, we are entering. That's what you need to be like in your trading. We're entering here. If price wins, we don't care. I mean, that is an absolutely crazy win there. That was probably not really too sure what happened there, to be honest, but can't complain. So same thing again. See what happens. See if price can break. Okay, so we have a break of structure here again. So we get our buy position. We drag it to a 1 to 2. We enter. Then we see what happens. Again, another winning trade. A lot of volume so far this month, which is giving us a good start. But you'll notice that I take a lot of trades. It's usually one trade at least per day, probably on average, with this strategy. Obviously, this isn't how I trade live. This is just a little tester. There we go. Okay, another win. We got 3 wins in a row. This is going suspiciously too well. It's never usually good if a strategy only wins. It usually means there's a losing streak on the way. This one probably won't have a break of structure. Not anytime soon anyway. So we are getting a bit late. We only enter until 3:30. Now we're going to call this one a day. On to the next session. Jesus Christ. That was a big melt. I'm going to skip that one. Zoom in. Apologies if you can hear the mouse clicking a lot. It's because I have a lot of price to actually click through. Okay, so this one. Okay, we have technically, this was the structure point. A lot of people would see it differently, but I see that as a structure point. So we're going to have that there, stop loss there, and then take profit here. Place order. There we go. See if we can melt. Okay, so price came close, but now we're going to close this one out early because price has broken this structure here. You could say this was the structure or this was the structure, but I thought this one is the structure. So we're going to close that one out early because it'll probably, hit stop loss. But that's what I've done on every single trade in all the episodes. So it's not like I'm only doing it on a certain trade. I do it every single time if that does occur. I'm basically trying to reduce the size of the losses on average. And if I can do that, then it means, I'm losing less. And if I do that over 10 trades or 100 trades, then, it can add up to quite a lot of profit basically saved. So we're just skipping through these trades. Another candle that's gone to heaven. Jesus. Another candle that's gone to heaven. Where has price even gone? There we go. Who knows? So we'll see what happens here. Okay, break to the upside. Very, very clean. Stop loss below the second wick there. And there we go. I saw my entry and was like, absolutely not, I'm going to hit your stop loss. Always a great feeling, as you guys probably have experienced yourself. Okay, we have broken to the downside. And the beauty of this strategy is it will be very easy to automate, as long as I can identify how to classify the stop loss and take profit with the highs and lows, basically. That one was a bit brutal. Get another crazy one. When I see those candles like that, where it's either a lot of volatility or there's a massive wick, I probably just won't trade. And there's going to be filters that we can add later on that gives us an easy understanding of, let's say there's a news event or something like that, where we just simply don't trade. It's hard to keep track on it when I'm just clicking through, like I could do 5 clicks and go through 5 days. Whereas in the live markets, you're checking the news before you enter a trade anyway. And that's kind of the main difference between backtesting and live trading. You usually treat backtesting with very little care compared to your live trading because there is no real money on the line. And the main issue with this is that when you are then taking your backtesting to your live trading, you've obviously done all your backtesting with no money on the line. You don't really check if there's news. You don't care about your trade being in profit and then not being in profit. You don't really care about the outcome as much as you probably should. So to get the best results in live trading and the most realistic results compared to your backtesting, you have to kind of imitate exactly how you are going to trade live. And if you're not doing this, then there's no point in backtesting. Otherwise, you will see a massive discrepancy between your tested results on previous data and your live results in the real life markets currently trading. So definitely something to consider for a lot of people watching this video. So this one here is another, yeah, we're going to ignore that one. So you'll notice that because I've done this for 3 months now, it's actually very easy to notice when there's a setup or not. So right here, I can see immediately, I've done 3 clicks and I can see that there's a buy setup. You guys are probably seeing the exact same thing. If you've seen the other episodes, you'll know that, okay, Will was going to buy here. And he probably shouldn't have bought there. But like we know as traders, it's not about each individual trade. It's about the overall performance. You know, we could have 5 losing months and still end the year in profit. It's the same with the S&P 500. People are happy to put money into the S&P 500 when it has, you know, fairly large drawdowns compared to the return, but they won't be willing to put time into their trading or their backtesting just because it has some drawdown or some losing months. Like, you can't expect to have the most perfect strategy going into the markets. It's just not possible. It's not realistic either. If you're trying to beat the people who are paid millions a year, sat in front of 10 screens, and you're trying to beat them, you kind of had to expect to not be perfect, especially with your results. You know, we're retail traders. We just had to try and make small gains and just compound them. Many small gains. They obviously all add up. And we finally had a win here. That is a small gain, a nice little 2% there. And if you'll see from the series that we've done so far, especially in the last episode, which I'll show you, you can be in so much drawdown and then one good streak and then you're out of the drawdown. See, this one's an annoying trade because obviously the trade is valid, so we had to take it. But it is fairly large. You know, 30 pips for us is quite a lot. But obviously a trade's a trade. And we'll see what happens here. This one actually did close below, so we're going to close this out early. Yeah, there we go. Same here, but this probably news. Yeah, there you go. See, I added the news filter, and then you can see that this was, yeah, news. And we don't want to be involved with any news. Okay, so now we're in July. So this video is very quick compared to the previous ones. The main reason is once you get an idea of what you're testing and how to test it, you can quite easily flick through a few years of data. Like alone, I think it was 10 minutes I've been recording, and then we've just gone through a full month. And then I can go obviously onto the analytics, which I'll show you in a second, and go through the results for a full month. Because I've done the hard work basically with collecting the data to trade and writing down the plan of how I'm going to trade it, when I'm going to close a position early, where to put my stop loss, where my take profit goes. Basically the whole plan was already written out before I test it. If you go into your backtesting without a plan, you can be very confused about what to test, when to take profit, when to close early, if at all. But I've gone into it with a plan, so I know exactly what to do, when to do it. So it's very, very easy for me to go through months and months and months of data in a matter of clicks and get quick results to see if the strategy is viable or not. Obviously, I can't base it off of a month of data, but when we do 12 months, 24 months, even 36 months, we get a good idea if the strategy is worth even taking into the live markets. So as you see here, we started the episode here. So we were at 3.1k on the account. We obviously had that winning streak to go to 9k, which was, we were up 6% at this point. We then had a losing streak and we basically lost all our profits. And now we are sitting exactly again at that 3.1k. So basically a break-even month. As you see here, 0.06. And if we see the month here, you can see that we started well. We had 3 winning trades, which is 6%. Had all these losing trades and one more winner. But if you noticed, all these losing trades, but we're break even. And that is the power of risk to reward. The same thing happened in May. We had 1, 2, 3, 4, 5, 6, 7, 8 losing days in a row, but we still ended the month up 3%. So this kind of shows you that don't be too caught up on your win rate or any of the stats like that at the start. Obviously you can improve that and you should be trying to improve your win rate long term. But for this strategy, I'm very, very happy so far. And just looking at the data here, average loss 0.9% now. This would probably be 1% if I didn't close any trades early, but we got it down to 0.9%, which is great. Also, the average win is probably slightly lower too, because I have had trades where I've closed the wins slightly early because of certain invalidations. But what we can see here is 13 wins, 20 losses in 2 months, which is 33 trades. And over 33 trades, we're up 3%, which is average of 0.1% per trade, which means when we enter a trade, we're going to make 0.1%. Obviously, this is only 2 months, so I'm going to put together a full spreadsheet and kind of report after 12 months, because the first 2 months are very, very profitable. The first 3 months even were very profitable. Obviously, this is our first break-even or losing month. I would class it as a break-even month because we were at 0. At 0.06 is basically break-even. But overall, so far, so good. And yeah, very, very simple video. A full month completed. I'll catch you guys in the next one.